Welcome to JSR Voice. Now I want to discuss with you one problem and its solution under income from capital gains. I discussed a few problems, calculation of income from capital gains in the previous lectures. Now I want to discuss with you another problem. Let us go and discuss that. This is a question that I want to take now. So here I'm going to focus few points in solution so that we are going to solve it. So let us discuss the question. I have taken this question from H. Prem Raja textbook, that is Hamsrala Publications. Let us go and discuss that. During the previous year, Sri Giribabu sold his building. Okay, so let me show that once. Here, during previous year, Sri Giribabu. Who is Giribabu here? Giribabu is a assessee. Okay, he sold his building. So in case of building, that is land and building, we have to consider 2 years period to determine whether that is short term capital gain or long term capital gain. So here this is a building, so 2 years period should be taken, and it is situated in Bangalore. And when he sold during the previous year, for how much price? For 18 lakhs rupees. So 18 lakhs rupees is a selling price of the building. This is known as consideration received. Okay, so 18 lakhs is a consideration received. Always selling price will become consideration received. And next, the cost of which is 5 lakhs rupees. So actually, for how much price he purchased? For 5 lakhs rupees. When he purchased 12 years ago, so he used that building for more than 2 years. So it is not short term capital asset, it is long term capital asset. Okay, so note this point. Next, purchasing price is 5 lakhs, registration expenses incurred 40,000 rupees, and brokerage paid to purchase the house is 8,000. So at the time of purchasing price is 5 lakhs, but registration expenses 40,000 and some brokerage charges our assessee paid for purchasing, that is 8,000. So this total extra expenditure is 48,000. This should be added to purchasing price. Okay, so what is the total purchasing price of the asset? 5 lakhs 48,000. 12 years ago he purchased. Okay, and next, after selling the building within 3 months, he invested 4 lakhs rupees in NABARD, which has been notified as specified securities under section 54 EC. So after selling that building, he invested 4 lakhs rupees in NABARD notified and specified securities, and which is actually eligible for deduction under section 54 EC. Okay, so whenever they give like this, then compulsorily we should give that as deduction under section 54 EC. If the amount whatever he is receiving out of the sale of that asset, if he purchase a similar kind of asset, he will get deduction under section 54. Otherwise, if he deposits that amount in any capital gain scheme or in any notified specified securities, then also he is eligible for deduction under section 54. Okay, here he is investing that money, that how much? 4 lakhs rupees in NABARD notified as specified securities. Okay, so it is eligible for reduction under section 54 EC. Next, compute income from capital gain. They are asking us to calculate income from capital gain, and selling expenses are 80,000. Selling expenses we are going to allow as deduction from consideration received. You know that I explained that in the previous problems also. And cost inflated index number. Cost inflated index means CII number. In the year of purchase is 137. So in the year of purchase, that is 137. That number is given. But in the year of sale, how much it is? They did not give. Okay, but always we have to remember that. Okay, so I told in the previous classes also, always we have to remember that. Okay, that is how much? 348. Okay, so 348. And next, let us go and discuss the solution. So before going into solution, you should know the format of calculation of income from capital gains. This is a format that I always use it. So you too have to remember this format. I discussed a question with you, and those points we are going to take here in the solution. This is a solution. Okay, we are going to start it, and always you have to draw columns, particulars, amount, and on the top you should give heading. Computation of income from capital gain of Mr. So Mr. name of the assessee will be taken here. So what is the name of the assessee here? We have to see the question. Okay, assessee name is Sri K. Giri Babu. So assessee name is K. Giri Babu. Sri K. Giri Babu. Okay, so assessee name is K. Giri Babu. For the assessment year 2024 and 25, this is a total heading that we are going to give on the top of that format. Okay, and we are going to draw columns, particulars, amount. Here columns are ready, and we are going to record all the amounts. Always first item here is consideration received. Consideration received means selling price of the asset. Let us see what is the selling price here. So he is selling that building for how much price? That is for 18 lakhs. So 18 lakhs is a consideration received. Let us go and record that. 18 lakhs. And next, after that we are going to deduct selling expenses. Okay, and the other name for selling expenses is transfer expenses, and that is given in the question. If it is not given, you can put dash or nil here, but it is given here. So selling expenses, how much here? That is 80,000. You can see selling expenses 80,000. So we are going to write it there. Selling expenses, transfer expenses, both are same, 80,000, and deduct that from the consideration received. You will get some value. Okay, how much you get? Let us see. You can use calculator, students. BCom students can use calculators. Okay, 18 lakhs minus 80,000. So we will get 17 lakhs 20,000. And we should name it as net consideration. So whatever amount we get by deducting selling expenses from consideration received, that should be named as net consideration. And from net consideration we are going to deduct either cost of acquisition or indexed cost of acquisition. Any one we are going to deduct. When we deduct cost of acquisition, if our asset is short term capital asset. Okay, but here our building is not short term capital asset because assessee used more than 2 years and he is selling it off. Okay, he purchased it 12 years ago, they said. And when we are going to deduct indexed cost of acquisition, if our asset is a long term capital asset. So here in this problem, that asset is a long term capital asset. Okay, because it is used by the assessee for more than 2 years. Okay, in case of buildings, we should consider the period of 2 years. In case of other assets, 3 years. So here he used that asset for more than 2 years. So we are going to deduct indexed cost of acquisition. But indexed cost of acquisition is not given in the question. We have to calculate by using formulas. Let us see what are those formulas. Two models are there. Model 1 formula is, that is, if asset is purchased by the assessee before 1-4-2001. So 2001 to previous year, 2023 and 24. The more than 12 years period is there. Okay, they purchased in the 12 years back, and number is given, purchasing year number 137. Okay, and 2001 assessment year, that number is 100. Okay, so this purchasing year asset purchased in the year where actually the number is 137. That is why we can say that, we can say confirmly that this asset is purchased by the assessee after 1-4-2001. Okay, so not before, only after. So we are not going to take model 1 formula. This is not suitable for us. And which one is suitable? Model 2 is suitable. That is, if the asset is purchased by the assessee after 1-4-2001, then we are going to take model 2 formula. In this problem, asset is purchased by the assessee after 1-4-2001 only, because 2001 index number is 100 and they have given that number is 137, purchasing year index number. Okay, so confirmly we can say that it is after 1-4-2001. So we are going to take model 2 formula. So let me remove this model 1 from here. Okay, so I will delete this model 1 because we are not going to use it now. And next, model 2 we are going to use now. Yeah, let me calculate it. What is the formula here? Indexed cost of acquisition. Indexed cost of acquisition. Indexed cost of acquisition is equal to, you can see the formula which is given above. Indexed cost of acquisition is equal to original cost of the asset. So what is the original cost here? Purchasing price is 5 lakhs, but at the time of purchasing he incurred 40,000 as registration expenses and brokerage is 8,000. And I already told to you all that we should add this 48,000 to 5 lakhs so that we get original cost of the asset. That is 5 lakhs 48,000. Let us take here. Okay, 5 lakhs 48,000. That is original cost of the asset. 5 lakhs 48,000 into previous year index number. They did not give in the question, but always you should remember previous year index number as well as 1-4-2001 number. These two you have to remember compulsorily. Sometimes that will be available in the question, sometimes it may not be available. So that is why it is your duty to remember these two numbers. Remaining all numbers will be given in the question. So previous year index number is 348 students for you all at present, divided by index of the purchasing year. So what is the index of the purchasing year here? They have given in the question. So how much it is? Let us see. It is 137. Index of the purchasing year is 137. Let us go and record here. 137. Okay. So this is complete formula. We are going to solve it. So if we solve it, how much we get? 5 lakhs 48,000 into 348 divided by 137. So you will get 13 lakhs 92,000. Okay. So if you do that, you will get 13 lakhs 92,000. So this is our indexed cost of acquisition. Hope it is clear for everyone. Let us go and record here in the format. So what we are going to take here, only indexed cost of acquisition. So I am removing cost of acquisition. So here how much we are going to take? 13 lakhs 92,000. Let us deduct that from the previous value, that is 17,20,000. So we get 3,28,000. Okay. And here in this problem, indexed cost of improvement is not given. Improvement means if any additions are made to the asset, then we are going to deduct here indexed cost of improvement from 3,28,000. But in our question there are no improvements. Okay, there are no additions. That is why we are not going to calculate it. I am going to write it as nil. And next, if you deduct that, again you will get same amount, 3,28,000. So if you don't want to write that indexed cost of improvement, you need not to write that, because I have written here because already I framed the format. And if you write in the examination also like this, no issues, you can. If you don't want to write, you can remove that indexed cost of improvement completely. Okay. And next, after this deduction under section 54, we are going to deduct. So here he invested 4 lakhs rupees in NABARD notified securities. We can give as deduction. Okay. But whenever you want to give any deduction, you have to follow some rules. What rules you have to follow? Deduction under section 54. That is least of the two. First one is amount of capital gain available. How much capital gain is available now? 3,28,000. Okay. So let me write here. Amount of capital gain available is 3,28,000. And amount eligible for reduction. Second point is amount eligible for deduction. How much he invested in NABARD notified securities? 4 lakhs rupees. Okay. He invested in NABARD notified securities which are eligible for reduction under section 54 EC, that is 4 lakhs. So completely 4 lakhs is eligible. So I will write 4 lakhs here. But you tell me which one is least? 3,28,000. So 3,28,000 we should select it. Okay. So how to select it actually? You have to select it by drawing a circle around that amount. But here I will just change the color and I will select. So I will select 3,28,000 because that is the least amount. Okay. And this deduction whatever we are going to select, that should not be more than 10 crores. But here it is 3,28,000 only. So we can give it as deduction. Hence deduction under section 54. Here they mentioned section also 54 EC you can write. Okay. EC is equal to 3,28,000. Okay. So let us go and record there. Deduction under section 54 EC. How much? 3,28,000. So after giving deduction, income from capital gain is not there. It is 0. It is nil. Okay. So it is nil. There is no income. There is no income from capital gain, or there is no capital loss. It is nil. Hope you all understood this solution. Let me show it completely once. I will show this once. So this is a question that I discussed with you. This is a complete question that I am displaying here. And after this we have taken format and we solve this. This is a format that we have to take, and this is how we did the solution. And this is working notes. Why we need working notes? Because we need to calculate indexed cost of acquisition. So we took formula and we substituted the values, and we found out indexed cost of acquisition here. And next one is, this is deduction under section 54. Okay. So we allowed deduction under section 54 EC 3,28,000 rupees, and we calculated that by using this rule. Hope this is clear, students. So keep watching my videos. If you understand, like the video, share it and subscribe the channel. Thank you.